Welcome to Module 2. We're going to talk about credit, and I want to start by saying this. Credit is one of the most misunderstood, most feared, and most misused financial tools that exists. Most people either ignore it completely or they use it in ways that quietly destroys their financial future. And most of the time, they don't even know why they're doing it. By the end of this module, you're going to understand credit better than most adults in this country. And that understanding is going to change what's available to you. Let's start with the basics. What is a credit score? Credit score scale is usually from 300 to 900. Your credit score is a 3-digit number. In Canada, it ranges from that range, 300 to 900. That represents how reliable you are as a borrower. Lenders use it to decide whether to lend you money and at what interest rate. The higher your score, the less risk you represent and the better terms you'll get. Here's a rough guide to what the numbers mean in Canada. 760 and above is excellent. You'll qualify for the best rates and terms from A lenders, the major banks. 700 to 759 is good. You'll still qualify for competitive rates. 650 to 699 is fair. You may qualify with some lenders, but not all, and your rates will be higher. Below 650 starts to get difficult with traditional lenders. Below 600, you're likely looking at alternative lenders or private financing. Now, how is your credit score actually calculated? There are 5 factors, and understanding them is the key to improving your score. The 5 factors. Factor 1, payment history. 35% of your score is payment history. This is the biggest one. Do you pay your bills on time? Every time. A single missed payment can drop your score significantly, and it stays on your record for up to 6 years. This is the most important factor, and it's also the most controllable. Factor 2, credit utilization. 30% of your score. This is how much of your available credit you're using. If you have a credit card with a $10,000 limit and you're carrying a $7,000 balance, your utilization is 70%, and that's hurting your score. The target is to keep your utilization below 30%. Below 10% is even better. Factor 3 is length of credit history, which is 15% of your score. How long have you had this credit? Older accounts help your score. This is why you should think carefully before closing an old credit card, even if you don't use it. The age of that account is working in your favor. Factor 4 is credit mix, which is 10% of your score. Do you have different types of credit? A credit card, a car loan, a line of credit? Having a mix shows lenders that you can manage different kinds of debt responsibly. Factor 5 is new credit inquiries, which is 10% of your score. Every time you apply for a new credit, the lender does a hard inquiry on your file, which temporarily lowers your score. Multiple applications in a short period can signal financial distress to lenders. Now, here's something important. There's a difference between your credit score and your credit report. Your credit score is the number. Your credit report is the full story. Every account you've ever had, every payment, every inquiry, every collection, every judgment. It's the detailed record that the score is calculated from. You should check both. And in Canada, you can do this for free. Borrowell and Credit Karma both offer free credit score monitoring. Equifax and TransUnion, the 2 major credit bureaus in Canada, are required by law to provide you with a free copy of your full credit report once a year. I strongly recommend you check your credit report at least once a year, not just for the score, but to look for errors. Errors on credit reports are more common than people think, and they can be dragging your score down without you even knowing it. Now, I want to tell you something that surprises a lot of people. Your credit score affects more than just your ability to borrow. Landlords check your credit when you apply to rent a property. Insurance companies use credit data to set your premiums in some provinces. And in certain industries, employers check your credit as part of background check. Your credit score, in many ways, is your financial reputation. And like any reputation, it takes time to build and can be damaged quickly. In the next video, we're going to talk about how to build your credit from zero or rebuild it if it's been damaged. And I'm going to share my own story of what this process looked like for me. I'll see you there.